China's scrapping growth, and it'll affect Australia. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, let's have a look at this article from news.com.au by Tarek Brooker discussing, well, the risk to our economy, essentially, as China considers scrapping their growth target. Now, we had the global financial crisis, the GFC, and Australia's magic economy was powered through it by glorious leader Rudd, apparently, including his brilliant spending on the building education revolution, which has resulted in absolutely no improvement in our quality of education. And money, he invented the stimmy check. We used to get it. We had no problems. I think we got like $2,000 or something back in the day, something crazy. I know Rachel put it towards buying a sewing machine, and she used it to make her wedding dress, so good investment. So there you go, we got stimmy checks back in the day. Now, some interventionists will be adamant that that is what staved off the recession for Australia. And it's not. It isn't. What staved off the recession for Australia is our relationship with one big country, China, where we send about 35% of our exports to China. A lot of our iron ore heads over to China, guys. Big chunk of it goes to China. A lot of our imports come from China. A lot of the international tourists, a big chunk of them come from China these days. And don't forget property investment, everyone. Foreign investment. I've worked on projects that were entirely dependent on foreign investment to get them off the ground. So, because China, the interventionist economy it is, because they built and built and built and built to stave off the impact of the global financial crisis, that was a good thing for us. We got lucky, guys. We got lucky. That's all the major thing. Sure, the stimmy checks, they probably helped a little bit, but the building education revolution has had no impact on our quality of education. Putting the fat bats, the insulation in all these houses, it cost lives. It cost lives. And if here's a real depressing thing. If you have a look at the embodied energy in some of these insulation bats and how long it will take to pay back, it's really depressing. If you want to save energy, just don't turn on an air conditioner. There you go. There's how you can save energy. Maybe open a window. Shock, horror, gasp. I know these are innovative concepts, guys. I know they're innovative concepts. Now, politicians don't think like that. They want to put regulation in and rules in. You can't even open a window more than 100 millimeters now in a bedroom if you're higher than 3 meters. Yeah. Can you tell certain things annoy me? That's why louvers are popular. Anyway, let's have a look at this, because if China starts restricting, and this is what Tarek is going to warn us about, if they don't go down the same path, because there were rumors and murmurs that they weren't going to do the same type of construction stimulus as they did in the previous GFC to kick their economy. Maybe they would look at investing in technology or other things. If they don't have the same demand for resources from Australia, and already our putting our trade relationships strained to a side, that's going to have an impact on our economy. Simply because so much is exported to China. Let's look at iron ore. I'll bring up Google Maps just to put this into perspective, everyone. Because we've got coal as well. Big chunk of that's going to China. Once that comes up, more of it's going to India and Japan, but a big chunk is going to China as well. And coal is pretty much one side of Australia, and iron ore is on the other side. So we'll bring up Google Earth Pro. I still remember when Google Earth was new. That shows you how old I am, everyone. It was amazing. I loved it. When I was a student, to get an aerial image, we had to buy it from the government, like $100. So here we have all of the operating mines in Australia in 2014. Now what we'll do is we'll just turn them all off, and we'll turn on iron ore. We'll turn on iron ore. There you go. Western Australia gets filled with iron ore. And let's turn on good old coal. Let's turn on coal if I know how to... See, I'm becoming a boomer, guys. I can't even work buttons anymore. So we've got coal here. Iron ore here. There you go. There's Australia. Poor South Australia. It's okay. It's okay. You got like desert, I think, and concrete power poles. I mean, that's it. What more could you want? So there you go, guys. These are big exports from Australia, and I know there's a lot of controversy with our political parties seeming to push away from natural resources. They want Australia to assume, they want all Australians, those of us that live, in these tiny little places here, they want us to assume all the guilt for exporting this stuff overseas, guys. I mean, come on. Do people really... I guess, guilt's powerful. It's a new religion, isn't it? So there we have it. We've got parts of Australia that will be affected, and not just these remote areas. You get people flying out from, from Brisbane to these mines here, coming back, commuting. You got the poor real estate agents having to sell these hyperinflated, properties in these mining areas. So it will have a flow-on effect. I'm an example of that. We worked on just, about 6 months after we started our business, we got some big mining projects. 2 mine industry areas, Daunia and Caval Ridge. They were the 2 big ones that we worked on as a start, and they helped me start my business. They helped me get my home. They gave me the confidence to bring Rachel on full time because she was contracting to another architect when we first started. And then Rachel said, "Okay, if you can afford to have me here, we're having kids." that was the decision and how it was made. So let's have a look at this. In the years since the GFC, the Australian economy has been heavily supported by demand for our mineral exports from China. And another thing to consider from the GFC is, I might try and bring this this chart up. Well, I can tell you our GDP growth has grown, but our GDP per capita is still growing, but it's growing below trend. One could make the argument that the fact that we're growing... So, I'll draw a little chart here. Let's pretend this here is our GDP, and it's growing like, the trend is going down per person, per capita. So it may be, the government may be going, "Oh, look, our GDP is going..." That was unintended, but that's probably pretty accurate. Our GDP is going to the moon, but the growth per person is going down over time. Since the GFC, it's been below trend. So we've got population growth masking the fact that we're growing slower. And what does that mean per person? It means your quality of life is getting worse. Just think back to the GFC. Is it harder to scrape together a good life? For people to get started, for people to get into housing. I remember when we got into this place, we thought it was expensive. Now it seems quite naive, actually. What we paid for it is considered expensive. So... during the GFC's dark days, when it looked like Australia would follow the world into recession, the explosive demand for iron ore and other bulk commodities not only dragged Australia out of the doldrums, but into an economic boom. And the problem is, what did we do with this boom? What, this fantastic economic boom? Did our country innovate? Did we develop new industries, new technologies? What did we put it in? Well, I will tell you. If we jump here, our economic complexity is... where is it? 73rd in the world. It's going down. It's going down. No, we didn't. Yeah. I'll have a shot of coffee, and you let me know in the comments what you think. What you think we put all our money in. Housing. Good old Aussie housing. So, but like so many other elements of our relationship with China in recent months, this boom may also lead to something of a bust. It always does, doesn't it? For years, the Chinese government has set ambitious economic growth targets. One reason for this is to have a benchmark for provincial governments to guide the level of public investment to be made in the coming year. But now, amid warnings from Chinese President Xi Jinping of a potential black swan or grey rhino unprecedented event, reports have emerged that the traditional economic growth target could be abandoned in 2021. In the years since the GFC, the Chinese government has relied heavily on the construction of real estate and infrastructure in order to meet the required economic growth targets. And there's a lot of YouTubers, there's a couple of young blokes that live in China, and they'll tour and look at some of these buildings, these abandoned cities. I mean, let's have a look. I'll type it into Google. China ghost cities. We can have a look here. I mean, you get... look at these things. Look at this. Just thrown up. And we get a bit upset here when in Australia we've got like a supermarket with a few empty shops. I was driving down to Logan yesterday, the suburb just south of, or the city south of Brisbane, and going the way I was going through Waterford, there were these empty shops that have been empty for years, and it's looking a bit bit tired, but certain other parts of it are quite busy. But then you compare it to this type of thing. I mean, look at the infrastructure that they just put up. You know, are they going to do this again? Are they going to build these growth cities? I mean, their population, you know, their well, anti-natalist policies to population growth are now biting them. It's hitting them. That's you know, well, it's a waste. Because these things wouldn't be built very good either, to be honest. So this is arguably why the roads to nowhere and ghost cities have arisen. There you go. The rising risk with China's growing debt pile have not escaped the attention of the Chinese government and China's central bank, the People's Bank of China. This is arguably one of the key driving forces behind the push to abandon the traditional GDP growth target, potentially in favor of one based on labour market outcomes. If Chinese officials have the mettle to pursue the task of rebalancing towards a more small, medium business-driven consumer economy, it could impact Australia significantly. Without strong growth in real estate and infrastructure construction to drive demand for our commodity exports, Australia's economy and budget bottom line could face a major hit. This comes at a time that the Chinese government is already looking to cut steel production in order to meet carbon emission targets. The Chinese Minister for Industry and Information Technology, Zhao Yingqing, I need to work on my Chinese pronunciations. I really do. I'll get to it. I had it on my list. Mate, I should work on all my pronunciations, particularly of names. English isn't my first language. Can I claim that? Where's my social justice points here in this future world? Made a pledge in January to cut the output of crude steel to ensure total production falls year on year. Okay, so they're cutting steel production. So here's the thing, guys. This is going to impact the Australian budget because we'll jump over here to TradingView. Trading Economics, not TradingView. Let's have a look at the commodity prices. And if we go here on iron ore, the government budget is dependent on, or they're pretty much expecting iron ore to be over 50 US. So there's a lot of room to move there. But if it dives back down under 50, and has it been that in 10 years? Yeah, it has. So they're aiming for here. If it crunches right back down to there, well, government revenue is going to hit. And that will also, that's not even talking about income tax and all of the other hits to the economy that manifest from it. So if you're trusting the government to take care of you or to depend on them, just keep that in the back of your mind that what's fueling them may potentially disappear. So you got to prepare for that, everyone. You've got years now to prepare to try and become as financially independent and stable as you can. What's more important? In the end, living a stress-free life, frankly, I'd say is the most important thing one could do. So, even with a cut in total steel production, China would still be importing positively biblical amounts of Australia's minerals exports such as iron ore. However, even a relatively small decrease in overall demand could have a disproportionate impact on Australia. As it stands, iron ore prices are already highly elevated relative to the underlying demand and total iron ore stocks at China's ports. If iron ore prices were to revert to around the level implied by port inventories relative to current consumption, prices could drop from their recent highs of around 170 per tonne to around 100 per tonne. And the price of these resources actually has impacts the capex of some of these mining companies. So I remember when we first started doing a whole lot of proposals for different mining projects, it was interesting to see that the quality of the fit outs and the camps and those type of things, they were quite high. And then all of a sudden the coal price started to go down. And then they had to find ways to save money and to reduce it. They will really flash at some point. You know, you get spoiled on some of these mines. We've got family that lives in these camps. They get all the food done for them, all the washing done for them. Then they come back home. They still, actually, my brother-in-law now, he's changed his job so he can work from home more. He's taken a pay cut, but he doesn't care. He prefers it. I think it's so he can go to the beach every now and then. I think, he loves it there. That's quality of life, guys. We had one project where they were looking at, this was like a real remote gas mine, middle of nowhere, looking at trying to improve the just aesthetics of some of these places. They were shutting down the wet mess on the mine. So, I mean, you're in the middle of nowhere. What are you going to do? So they were shutting it down. And then they wanted us to look at kind of, jazzing up the rooms because there's issues with mental health working out there, being separated from family. The sacrifices people make. So, according to figures from Treasury, a significant drop in iron ore prices would be bad news for Australia, particularly at a time when the rest of the economy is still recovering from the pandemic. For every $10 the spot price of iron ore falls, annual GDP is reduced by $4.4 billion, and the federal government's revenue is reduced by $300 million. With a price drop of up to $70 per tonne potentially on the table, based on some of the current indicators, the hit to the economy over the course of a year could be as much as $30.8 billion and reduce federal government revenue by $3 billion. While any significant decrease in iron ore prices could be a blow to the budget bottom line and the broader economy, it is important to keep in mind the budget anticipates iron ore will be just $55 per tonne later this financial year, not the $170 per tonne we've seen in record weeks. Yeah, but come on, when politicians get more money, they get used to more money. They'll waste it. They'll find a way to waste it. It'd be great if they reduced our debt and then reduced the taxes they have to farm from us. Wouldn't that be? That'd be a novel idea, wouldn't it? Do you remember the last time we got a tax cut? We got one just recently. Nonetheless, all the additional revenue could provide a major boost to headline GDP and the recovery of a federal budget still drowning in red ink. That being said, if China was to shift towards a more consumer-focused economy, it's not only iron ore exports that would be impacted. All sorts of bulk commodities from coking coal to copper could also take a hit, depending on underlying global demand outside of China. In recent days, iron ore prices have seen significant declines of around 10% from their peaks. While this may be just a pullback from a near-record bull run, there is some evidence to suggest that a peak in prices may be in sight. There is a correlation between China's credit impulse and commodity prices, and in recent weeks, the impulse has weakened significantly. Given that much of China's construction-driven growth is fueled by debt, it's perhaps unsurprising that there's a link between the two. While the explosion in demand for iron ore and near-record run-up in iron ore prices have provided an enormous boost to Australia's economy in one of its darkest hours, if Beijing is willing to pull the trigger on the rebalancing of its economy, that may come to an end. It's not the first time Beijing has claimed it would shift away from debt-fueled and construction-driven economy. However, given the president's concerns of potential upheaval ahead and the growing drive for a more sustainable growth engine, Beijing finally making good on its promise to rebalance its economy cannot be ruled out. With the potential for this move to have a potentially damaging impact on the Aussie economy, perhaps it's time Australia seriously thought about an economic rebalancing of its own. So there we have it. Well, I would say that the number one thing we need for an economic rebalancing of our own is to get off our obsession with property. I think that's the number one thing. Then give room for innovation. But you just need to get... I still think I'd love to see at least some discussions in the media at special economic regions, where we can have parts of the country where we can change the rules. Reduce the rules, reduce the taxes, reduce minimum wages, reduce the red tape to allow for innovation. And then see how that goes compared to other parts of the country. But can you see that? Can you see the political will for that? Hopefully, maybe with time. Maybe as more people discuss it. Maybe if we can shift the Overton window from a point of such dependency on the government to one of more individual liberty. Perhaps. I'm hoping. What do you think, everyone? Thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and want to enjoy the content I create here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I will see you all next time. Bye for now.